Equity crowdfunding is all about taking your company and actually allowing a large group of people to give you money in exchange for small pieces of ownership in your business. The companies come onto the platform, go through some due diligence, structure their round to raise some capital, either in equity, convertible notes, or some other type of raise. And then the platform helps process that and makes that available to what are investors actually getting? They are getting ownership. When you run an equity crowdfunding campaign and you offer shares for purchase, you are offering partial ownership into your business. As a company, you can choose the type of share, the type of ownership that you want to offer to the public. You can work with a platform to help structure and plan out your round, though rounds are typically run offering non-voting common shares. That is done so that when the investors are coming in, you're getting, potentially hundreds of new investors. These individuals are not suddenly taking over and getting some control of your business. They don't have a say in how your business operates. They're here to support you as the founder, but not try to get involved in the running of the company. The reason why we want to look at abroad, the US and the UK, is because the financial regulations are a little bit more advanced in those countries. We've really seen massive growth in the equity crowdfunding market in both places. We've started to see platforms acquiring each other as we've sort of entered a little bit of a recessionary period, but certainly billions of dollars being deployed for startups through equity crowdfunding in both the US and the UK. In Canada, securities are regulated by each province who have their own securities regulator. So in the United States, there's a single regulator, the Securities and Exchange Commission. In Canada, there's 13, one for each province and territory. On Equivesto, retail investors can invest up to $5,000 per company, and they can invest up to $10,000 if they have a higher net worth and they're sort of proven suitable. We also can bring accredited investors. So accredited investors are high net worth individuals who have over 200,000 in annual income, or 300,000 with a spouse, or over $1 million in net financial assets, excluding real estate. Accredited investors can also participate in equity crowdfunding, and they don't have individual investment limits. Equity crowdfunding round in Canada, you are a Canadian headquartered company, and you're raising on a Canadian platform from Canadian investors. As a company, you could raise up to $1,500,000 every rolling 12 months through equity crowdfunding. You do not need financial statements, but you do need to have a minimum viable product or demo version of your product or service, and you can be pre-revenue. Companies that cannot participate using equity crowdfunding are passive investment companies and public companies. Business that can work well for equity crowdfunding are small businesses that have a strong community focus and a strong positive impact locally. So restaurants, stores, community centers, breweries, wineries, these all work well as well for equity crowdfunding. Companies that don't work as well for equity crowdfunding are ones where the value of the business is tied to a small number of employees, where if they leave, the company is immediately less valuable. The 45-110 offering document is a document required by the regulators for every company using the startup crowdfunding exemption. Essentially, it's a 20-page summary of everything that a prospective investor might want to know about your business, and includes information on the background of the company, details of the founder, terms of the deal, who the equity crowdfunding platform is, the rights of the shares, the risks related to the business and investing, how long the campaign is, use of funds, minimum investment, campaign goals, all kinds of things. The document is also signed off by the company itself, attesting to its truth. So it's important that if there's any changes to the information presented, that the company lets the platform know immediately, and you can create a second copy, an updated copy of the document. This document must also be filed with the regulators as part of that report of exempt distribution within 30 days of the campaign closing.